Hey, good evening, traders. This is Trader Tim from eMoneyMind.com. Today is the 17th of August, 2017. Lots of stuff to talk about today. And let's start with the sell-off that we had, taking us down below the previous swing low, below breaking the gap, closing the gap that we had down here back in mid-July, and also breaking the 61.8 of the long. So a little bit strange that we came up and we broke the 61.8 of the short. But then again, selling pressure up here closed the day at a spinning top, and there's been a lot of world news coming out that is definitely adding some fear into the markets. We talked about the VIX earlier this week, and the important flag or sort of red flag about the VIX is that earlier in the week, when we came up and had the spike, last week even, had the spike in the VIX, we broke the swing high of the May VIX swing. And if we come over here to the SPY, we did not sell off and break the swing low of the May S&P swing low. So that was kind of a sign that there could be more selling to come. And that's exactly what we talked about and what we saw today. So how do you take advantage of a day like today? Well, first opportunity this morning, we had the gap down. We gapped down below yesterday's range. So first 5-minute play, getting long above highs, didn't really amount to anything. There was some choppiness and some back and forth, so nothing really happening there. 15 minutes in, we had a reversal, and you can look to the 5-minute bar for that 15-minute or 30-minute reversal. So nothing really doing off the first 5-minute. It wasn't a gap and go day. We actually had a small bounce before the market sold off. And you can look to the 5-minute chart in the 15 minutes or 30 minutes after the bell, and simply using the breakout method, putting a sell stop below lows or a buy stop above highs. In this case, the sell stop would get you in the trade, and you're able to ride it down a little bit before we get this little shakeout. If we look at the 512 tick chart from yesterday, overnight, yesterday's close rather, right around the close, down to this morning's lows, gave us a retracement, a larger, more of a 15-minute retracement. So that would be a level that I'd be looking at. I kind of have my eye on that in the morning as we're bouncing. We got a high tick 15 minutes after the bell. That coincided with a high price of the morning. So you could take the first 50% retracement short. After that high tick, that gets you in short, basically gets you short right around the high of the day, and then you can just ride that as long as you can. Another opportunity, simply taking from the break of the swing, prior swing low back here. You can just take the recent swing high down to lows. In situations like this where you've got a high and then a little bit lower swing high, you can draw both of them like so. And they're so close that 6-tick stop, even on the lower one, your stop, so if you put your order out at a 61, your stop would be at 62.50s. So 6 ticks keeps you in even the larger retracement above us. And so for that reason, just going ahead and taking the lower one, just in case the market doesn't make it all the way up into the full retracement, which it didn't, gets you into the trade, and then same thing, you can ride it down trying to trail swings as long as possible. Now this market today was a little bit hard to kind of hang on to, if you will. We had just a spike right here about hour and a half into the day, and it was enough to kind of shake out from the high of the day, that short from the high of the day. And then there wasn't really another great opportunity. We broke the swing low, and then we didn't really get a pullback. So, a couple opportunities early in the morning to catch, a piece of the move. But if we scroll forward, you can see, buyers came in and were able to push the market a little bit higher. We had a 50% on the day, trading hours only. Like so, that tested twice. So the low was bought and pushed higher, sold off again at that. Or sold off once at the 50% trading hours only, high to low, and then a second time. If we scroll over to the first one, we can see that one right here. You can draw from highs to lows. This one was a little bit dirty, but nothing too crazy in terms of the volatility that we're seeing. It's still adhering to the basic principles. So there's a lot going on in the broader world that has definitely played a bigger role in sort of these panic sellings, if you will, in the markets. And so you notice, if you just go through the day, a lot of trading activity has occurred. There's a lot of movement and a lot of candles on the 512 tick chart. So as we go forward into next week, the next major swing low is down here at 2400, and we're kind of talking about, well, if we get a sell-off, it's probably going to be pretty quick, pretty strong, and if we break this 61.8, maybe look for a move down to the 2400. So I'm going to draw up price level there. That's kind of what I'll be looking for. In the meantime, we broke the swing low, we put in a lower high. So if we pull up the trend lines channel, you can draw a nice little channel here, and we've broken the uptrend line that we had for the last couple of months. A couple, well, really, into last year. This uptrend line has been broken. And so a bounce up to the underside of the trend line is possible. Selling off down to that 2400 is fairly likely, just because it's a big round number, and with all of these tests unable to make it to 2500, now there's going to be a lot of people that are ending up underwater, and as we start to head lower, their stops get taken out, and that's what kind of begins to accelerate the market quicker, especially when you have situations here like we have the gap up market. Once it breaks that low, a lot of people have stops below that, and then that really accelerates things. Now you come down to the 50, new orders are placed, those get taken out because the market moves lower, and then it just continues to accelerate, break the 61.8, break the previous swing low, and that's when you get these big body candles. So you can look to the previous month or so and look for swing lows, swing highs, look for gaps, and those are often places where you'll have bigger trending days occur. So I expect a lot of good trading going into this fall, whether it's up or down, I don't know, but there will be good opportunities. Hope everyone has a great weekend. We're doing live trading again every Tuesday morning. You You can check that out at emoneymind.com/VIP. Thanks, everyone. Have a great weekend.